Good afternoon, ladies and gentlemen. Thank you for joining us today and welcome to the BDI Business at OECD International Tax Conference addressing the tax order of the future, global, green and digital. We're happy to have you here with us today in Berlin and so many of you following us online. My name is Philipp Moser and I will be your moderator for today and for part of the sessions. But before we dive into the heart of the discussion, I would like to give the floor to Christian Kieser for his opening remarks. He is chair of the BDI Tax Committee and global head of taxes at Siemens. Christian, the floor is yours.
Thanks so much, Philip. And I wonder if that mic shouldn't have been infected before I take it over. Yeah? It doesn't feel real to be here. Welcome from my side. I could pretty much welcome everybody in the room because there are not that many people here. But I'm only going to represent and welcome some of them. And it's Pascal Saint-Amand. Thanks for being with us today. Not self-explanatory because we know that your travel schedule is busy, but then you have to keep your HON or other premium status with most likely Air France. So we appreciate that a lot. We appreciate that Martin Kreinbaum is here and then the other friends. Right? Achim. Please don't talk because many people, which I'm going to welcome now, virtually are following us. Yeah? So no disturbance, please. We are going to discuss today what is the new tax order of the future. And I believe that's perfect timing because the rubber is about to hit the road. And I emphasize about to hit the road because it doesn't hit the road yet. Yeah? And to stay in that picture, the rubber would be pillar 1 and pillar 2. Well, and you already figured it out most likely. We, the industry, we are the car or the driver in the car. And then we have the world economy and many other things around us through which we try to steer our car. And as I said, I would like to stay in the picture. If you're talking about a rubber should be reliable. Reliable to keep the car on the road when the sun is shining, when there's rain, when there's heavy storm. It shouldn't burst when you brake, even if you brake harsh. So it needs to be reliable. And there we build on discussions that we are going to have certainly. We believe there's still some open items where we would love to see an open dialogue, and I'm pretty sure we are going to have that one. But not only that the rubber needs to be reliable, yeah, the rubber shouldn't slow down the car neither, yeah, because then that wouldn't be really efficient at the end. And in that regard, you might not be surprised that administrative burden and administrative cost of the new system is a big concern for industry. There we believe that there is still room for improvement as always, and again for an open dialogue and discussion on the matters where we feel most pressure when we are already having started our company-wide and company internal implementation projects. And again, I'm looking to Achim because he tries not to smile that I always come up with the same stuff. And I'm not going to mention details here. We are having the full day to go into details. And then finally, the rubber shouldn't give any competitive advantage to no specific car. This is from the Formula 1. Competition should be on other things. And there I believe we are all having the same mindset. We need a level playing field, but we really need a level playing field. And having said so, I still believe that there are some open items. One of the bigger items is, are some countries going to participate? Are some domestic rules going to be accepted? Yeah, and I'm not saying which ones, but you know it anyhow. And there are still some rules within the design where I believe that they could give a competitive advantage or be a competitive disadvantage for some companies simply because certain systems, and I'm thinking here about pension funds and contributions to pension funds, certain systems are designed differently from country to country, and some rules still don't align perfectly well. That's understandable because there hasn't been a lot of time to talk about that. It's perfect timing because of some other more unfortunate things, because I believe what we do here is having an open dialogue, and that that again emphasizes the core values of our democracies, that we are able to discuss concerns, that we are open to listen to arguments and reasons, and that we all strive to come to the best solution. To come to the best solution for industry and for growth, and then to finally be able to support achieving the United Nations Sustainability Development Goals, because it's only growth that will enable that. And there I believe we are all on the same page. And with that, I'm very confident that we are going to achieve good and lasting results at the end. And then, finally, and then I'm going to conclude, sometimes people believe tax is boring. We in this room, we know it's not boring, and the colleagues participating virtually know it too. But sometimes it can be comfortable, it can be assuring, to have those boring things where you discuss stuff, where you're all on the same page, especially in these times. So I wish all of us a comfortably boring afternoon in Berlin, discussing our wonderful new tax order. I hope you will enjoy it. And with that, I hand over to Ellen, who is somewhere in the virtual space. Ellen, where are you?
And hopefully
we can hear you and we can see you most likely. There you are, Ellen. Please.
Okay.
The screen is yours.
Thank you very much indeed, Christian, for that interesting analogy of the two-pillar digital solution as a car. I'll give some thought to that. Thanks also to BDI in particular for organizing this conference together with the OECD, and in particular to Monica Runeman and Philip Moser. It's my pleasure to be here on behalf of business at OECD. And I'm only sorry that the positive COVID test last week means I can't be there in person as I had originally planned. As Christian said, there's no doubt that this conference today comes at a time when engagement with OECD on international tax policy is more important than ever. In today's complex and challenging world, we all face great uncertainty. And uncertainty is rarely an incentive for investment. So for a future of sustainable and inclusive growth, governments, business, and society need to work together through collaboration, dialogue, and trust. As we move forward from the COVID-19 pandemic, we face a world driven by significant transformations, including digital transformation and the environmental transition. At the same time, COVID-19 measures have resulted in changes to workforce mobility. Effective international cooperation for trade and investment and global supply chain stability are at the forefront of our leadership concerns. Tax policy questions and the OECD as a global standard setter for tax are not surprisingly at the core of these issues. Tax policy is central to recovery and growth, and we look to work with the OECD to ensure a comprehensive, coordinated and practical approach, whether that's in the context of the work we're doing to ensure a successful Pillar 1 and Pillar 2 implementation, or in addressing environmental taxation or other taxation matters. In the current economic, social and geopolitical context, we appreciate the need for governments to raise additional tax revenue. However, tax policy choices should not become barriers to economic recovery, nor create disproportionate burdens on business. These should be win-win choices that support both trade and investment, boost innovation and productivity, and also deliver tax revenues. As an underlying principle, working with our OECD and government colleagues towards greater tax certainty and administrability remain a common thread across all of our activities. Today's agenda will address important work towards these objectives. We appreciate the close dialogue and engagement with Pascal and his team to address both the technical and the practical aspects of the current tax policy agenda. I'm looking forward to today's discussion, and again, our thanks to BDI for hosting us all today. Thank you.
Thank you very much, Alan, for your introductory remarks. Now I would like to give the floor to Martin Kreienbaum, our first keynote speaker of today. Martin, the floor is yours.
Thank you very much, Philip, and good afternoon, or good morning, good afternoon, good evening to everybody. Let me first thank the organizers of this conference, the BDI, BIAC at OECD, and EY for organizing this conference and also for inviting me to speak. It's a pleasure and a privilege. So I would also like to welcome everybody to this International Tax Conference, whose focus is on the tax order of the future, which is described in the title of this conference as Global, Green, and Digital. In these uncertain times where we are experiencing some utterly concerning events causing enormous suffering and tragic loss of life, it's sometimes hard to concentrate on the global tax order of the future. In recent weeks, many of us, and here I would like to include the tax administrations and also the customs administrations, have spent their time and resources on providing humanitarian aid for our Ukrainian neighbors and also on coordinating sanctions. It is quite reassuring that to see the worldwide support for the immediate end of the conflict. Nonetheless, I'm happy that we are meeting today here to discuss and to exchange views on the future tax order. It's a pleasure to welcome everybody in a hybrid format. The fact that most countries have already lifted many of their sanctions, many of their restrictions, COVID-19 restrictions, gives us hope that the next meetings can take again place in a more personal setting. Global, green, and digital. These three words are indeed key attributes to the future, for the future of taxation. Global and digital. Reforming the international tax system has been a predominant topic in the global tax policy discussions over the last years. As we know, increasing digitalisation and globalisation over the recent years with their corresponding tax challenges have led to the reform of the international taxation system, which has been described by many commentators as a historic reform, as an historic achievement. And I'm very pleased to see here today so many of the key persons which have been playing decisive roles in that reform process, the OECD, CTPA, Pascal and his team in particular. They have provided a neutral and technical platform for a highly sensitive discussion, without which the achievements of the project would not have been possible. The starting point, as many of us know, for the Pillar 2 solution was Action Item 1 of the BEPS Action Plan, the taxation of the digital economy, and especially the changes in value-creating processes and the rising importance of highly mobile intangible assets, and also of cross-border services allow companies to operate in countries without physical presence. There was the growing sentiment that the old traditional international tax architecture was no longer fit for our new digitalized and globalized economic environment. And as a result of many intense negotiations on addressing these challenges, the inclusive framework on BEPS reached agreement on the two-pillar solution and on a detailed implementation plan last year. I assume that many of my colleagues in the audience of today's meeting are familiar with the tax policy goals of the two-pillar project, and also some of you, many of you, most of you with the technical and legal aspects, which will be discussed later in detail, so I won't trouble you with the technical details on Pillar 1 and Pillar 2 now. But what is really important from a tax policy point of view is that the member states of the inclusive framework on BEPS, around 140 countries and jurisdictions, have demonstrated their ability to deliver, despite different interests, despite different assessments of the urgency. Last year in summer, in July and later in October, after years of controversial discussions, after having explored and dismissed a number of different approaches, in particular on Pillar 1, including new and complex, and I also would say complicated concepts, such as consumer-facing business, this was probably the last chance for us, for the 140 member states of the inclusive framework, to show that we can deliver. It was the firm conviction, the firm belief of the vast majority of countries represented in the inclusive framework that a globalized world, a borderless and interconnected digital world, and free markets need an internationally coordinated tax system which guarantees a certain level of minimum taxation on the one hand, and also a fair allocation, a fair international allocation of taxing rights on the other hand. And when I talk about fair allocation of taxing rights, I mean a predictable, internationally accepted allocation of taxing rights which provides tax certainty at a comprehensive basis, and the absence of overlapping taxing rights and the avoidance of double and multiple taxation. And the counterfactual scenario last year was a real risk. The counterfactual scenario, uncoordinated unilateral measures in many countries with respect to digitalisation, the DSTs discussed in many countries, including in European countries, but also defensive measures to ensure a minimum level of taxation, and probably an EU-wide digital levy on top. This scenario was real and imminent. Looking at the progress that we are now making with respect to the remaining technical details, I am confident that the international reform can soon enter into effect. I can reassure everybody that this is a key priority of all participating states and jurisdictions. I also would like to mention that I highly appreciate the hard work that the European Commission has invested in the translation of the OECD Pillar 2 model rules into a draft directive. And let me be very clear. The implementation timetable agreed by 137 member states of the inclusive framework and endorsed by the heads of governments of the G20 countries forms an integral part of the overall agreement. We have agreed to implement the two pillars in 2022 so that the rules can enter into effect in 2023. This timetable is extremely ambitious, and we take the concerns expressed by business and the concerns expressed by tax administrations with respect to their abilities to comply with the rules and to administer the rules very seriously. And many of you will have seen how the French presidency interpreted the entry into force date in the latest version of the Pillar 2 draft directive last week. By setting a positive example in the swift and accurate implementation of Pillar 2, the European member states will be able to meet high public expectations. And at the same time, I'm confident that we find pragmatic solutions to address legitimate concerns regarding the speediness of the implementation process. On Pillar 1, the work is making progress as well. The multilateral convention is still in the making, and we can expect the treaty to be open for signature in summer of this year. The future of taxation is not only global and digital, it's also green. Sustainability and environmental friendliness plays a big and growing role, not only here in Germany. It is our common understanding, G7, G20, and probably the Global Climate Club, that the tax order of the future should also be green. The issue of tackling climate change and the question of how international cooperation can contribute to this urgent task constitutes an essential part of Germany's G7 presidency. In particular, we would like to deliver progress on this matter through the establishment of an open and cooperative international climate club, a concept open to all countries that are ambitious on mitigating climate change. We plan to cover relevant items such as carbon pricing policies, also the comparability of direct and indirect carbon pricing, as well as carbon leakage. In the G7 finance track with a specific G7 working group dedicated to climate change mitigation, chaired by UK and Germany, jointly chaired by the two countries. This is an initiative that will contribute to the green world tax order. Last but not least, the digitalisation of taxation. The use of digital means of communication and tools is essential for the future of tax administration. From electronic filing to e-auditing, from crypto payment to artificial intelligence, it's hard for all of us to keep pace with the technological developments, and we should not underestimate the potential that these new technologies provide for taxpayers and tax administration. I look forward to the discussions of new ideas and approaches this afternoon. Once again, I would like to emphasize the importance of all three topics today. The two-pillar solution demonstrated what we have achieved, what can be achieved at the international level when so many countries and jurisdictions act together. I am certain that we will use this experience also in other tax fields dedicated to climate change mitigation, for example. With this, I would like to wish you a wonderful day. Thanks very much. Thanks for your attention.
Thank you for your insightful comments, Martin. And now I would like to give the floor to Pascal Saint-Amand. He is Director of the Center for Tax Policy and Administration at the OECD. And in the past decade, he has played a key role in the tax negotiations at international level. So Pascal, we are really happy to have you here with us. The floor is yours.
Thank you very much, and good afternoon, good morning, good evening, given that there are people probably listening to us on other continents. Thanks for the invitation, and thanks for this conference. And thanks for bringing some of us back to real life, and not only as I am currently for many a stamp on the screen, because we're all tired of that. And more than being tired, we are kind of drying up by not interacting in person. That's what we need to do. So let's hope that COVID comes to an end as quickly as possible. I cannot start without mentioning that what we've done for the past 10, actually 14 years for me at the OECD has been about building a multilateral world where countries work together. I would use the OECD motto, which is better policies for better lives. And I think none of us would have thought that we would, in 2022, mention this in a context where a few kilometers from Berlin, there is a country which invaded another sovereign country, starting a war that I think none of us can understand, which, beyond the current tragedy, raises the question of the fragmentation of the world, of multilateralism. But I think international organizations have a duty to try to build bridges, including in these terrible circumstances, certainly not with the country invading the other, but to try to keep multilateralism as much as we can. I very much like Christian's comparison with the rubbers, which made me think that it's not a car, but a motorcycle that we're driving very fast on the circuit. I will use a completely different image, but I think what's happening, and that may explain the level of discomfort that has been around for years now, and maybe around for a few more months, maybe 1 year or 2 years, is that we are turning the page of the international tax rules as they were drafted 1 century ago. We had a frame which had been built by the League of Nations, and we realized, because the global financial crisis starting 2008, that this frame was no longer fit for purpose and that we had to change frame. So that we had a page and we need to turn the page. We are turning the page. And I think the agreement, as mentioned by Martin, reached on the 8th of October, is the time where literally the page has been turned. But we need now to legally write the new page. And that's the historic agreement. But this is also the achievement of the completion of 10 years of effort to build that multilateral environment, which would have, and I hope I can describe the new page now, to be one more balance between tax administration and business. For 30, 40 years, we had rules which were no longer fit for purpose, and governments didn't take the responsibility of fixing them, which means that players, private players, companies, individuals could take advantage, which created frustrations which were not really justified from tax administration because what was done was legal, but they felt that the outcome was not the right one. And this has resulted, I think, in a trust crisis. Companies not trusting tax administration for being too aggressive, and tax administrations not trusting business, which was not a good environment that we had to fix. And I think the new page is about finding the right balance there. Pillar 2 is about that. You put a safety net, 15% effective, which is very high contrary to what some say. And there you give comfort actually to everybody, to the tax administration on the one hand, but also to business about leveling the playing field. This is what matters to you. And without that safety net, we were not leveling the playing field. Now, leveling the playing field means that everybody has to implement, including the countries which are not known for being the best at implementing global agreements. I don't name anyone, but, and I think that's the very positive dynamic we've been through for the past 4 years, not only for the past year, which is that there is a real appetite, at least on both sides of the Atlantic, and I would add developing countries to that, and I would include China as well, to build something that countries would implement or would recognize. We know that Pillar 2 is not a minimum standard, which means that countries may decide not to implement. I don't know whether China will decide to implement Pillar 2 or not, but what is important there is that we get the critical mass of countries implementing, and that the countries not implementing recognize the right of others to implement. And with the frame which will follow the adoption of the rules and the adoption of the commentary, which are already out, the frame that we will hopefully complete by year end, we should limit the risk of double taxation, the tensions or frictions which could result from the implementation of Pillar 2. Better balance too with Pillar 1. And Pillar 1, I think, has to be looked at in the context of stabilizing the international tax system. More fairness by a better distribution of taxing rights. 25% of the rent is defined as more than 10% of profit on sales for the largest companies, more than $500 billion at stake, so that's something meaningful. We mean business there. But Pillar 1 comes together with tax certainty, a robust mechanism to eliminate double taxation through binding and mandatory dispute resolutions and dispute prevention mechanisms, which will be unprecedented. There are some precedents in the European Union, but much more limited than what is at stake there, with a global agreement, including from the countries where we know business felt that there were issues with tax certainty. And I'm not only talking about developing countries here. Second, and that's a very important part of the deal, we also have the commitment from countries not to introduce, and when they are, to repeal unilateral measures. That's part of the stabilization of the international tax system. Extremely important part. And I would add to that something that we don't necessarily talk about every day, and I think we should, which is Amount B. And here, I would like to make a call to business for you to speak loud on Amount B. This should be a low-hanging fruit. It is not. It is not because you have a number of people who still pray the arm's length principle God, and they think that if we slightly depart from it, the world will collapse. Actually, I would tend to think that it's the other way around. And two, because there are some fights on trying to grab whatever on both sides, And it would be much simpler if we could come to an agreement on amount B, which could very seriously contribute to the stabilization of the tax system by bringing tax certainty. And when I mentioned the balance, now that I've mentioned amount B and amount A and Pillar 2, I have to highlight the fact that on Pillar 2 there is the subject to tax rule as a minimum standard, which is also very important. For sure, I know that this community, business community, doesn't like it much, but we also need to recognize that developing countries like it as a way to protect themselves. It may be more psychological than real at the end of the day, but it's part of the deal, and we need to deliver a meaningful subject to tax rule. So that's what we are doing. That's what we did politically, and we secured the agreement that nobody believed in. We delivered, and the page is turned. Now we need to write the multilateral convention, and we are. We need to get it signed and ratified, and there is a time schedule, and it will be done for the signing. Now, I know that a number of people are wondering, will it ever be ratified? And my response to that is, think of the counterfactual for some countries which some are suspicious about. What's the counterfactual? All what I've described would collapse if some countries don't ratify. For a limited number of in-scope companies, you would lose the stabilization of the tax system for all companies. You would reopen the unilateral measures. And by the way, this reallocation of taxing right would happen one way or another by countries moving away from the current agreement. So I would tend to think, and that's why I'm pretty optimistic, not only because I'm paid for being optimistic, but that's the direction we are heading on. And what I can testify, and I think Martin would testify as well, is that we are all working 24/7, 12 hours a day to deliver this. And when I say we, it's not the Secretariat, it's the delegations as well, in addition to the Secretariat. Two additional comments, because it's part of the agenda for this new Global Tax Order conference. And Martin mentioned the carbon pricing issue. Now, I know that carbon pricing, when the prices of oil and gas are just skyrocketing, may not be the most popular thing to mention, but we all know that in the long term, we will have to address that issue, and the OECD is keen on taking on that task. And we intend to build an inclusive framework on carbon pricing where countries will be able to exchange views and to build a common understanding of the current situation. Last word to conclude, and that's a thank to Martin and to Germany as the chair of the G7. Once you've done all that, you need to anticipate, and you need to anticipate how all this will be implemented. Digitalisation of tax administration, which, and some say that tax administration is tax policy, which is the case. We need to get it right so that all these new words on the new page will be read properly and can be implemented with the lesser cost of compliance. So we thank the G7 for inviting us to reflect and make some proposals on that front. And on that note, I would like to thank again BDI for the invitation and look forward to our conference. Thank you.
Thank you very much, Pascal, for sharing your expertise and for providing context. And after this, we are going to discuss the first panel, the reform of the World Tax Order, Pillar 1 and Pillar 2, the way forward. And for this, I would like to hand it over to Will Morris, who is the moderator of this panel, and I would like to invite the panelists on the floor. Thank you very much.
In the room. Good morning, good afternoon, good evening. I'm very sorry I can't be with you. I'm delighted, however, that Anne-Marie is in the room and that Achim also. And Janine is joining me in the virtual space that we're occupying. So thank you very much for this opportunity. I'd just like to continue with Christian's metaphor for a second about cars and tires and rubbers and all of that sort of stuff. And we have seen so far a very elegant Franco-German motor purring down the road. The only thing that I'd point out is that it's running about 20 minutes slow. So Christian, we may need to tune that up or put the racing tires on to get back on track, but we'll certainly do our best to do that. I want to start by emphasizing that both Pillars 1 and Pillar 2, the whole of the OECD project, is, as both Martin and Pascal have said, really an amazing achievement, a huge amount of work, and has produced results that we would not have thought possible even a year ago, far less 2 or 3 years ago. I can't help but observe that the only slight thing that has been missing over the past year has been business involvement. But we are now delighted to say that we're beginning to rectify that with involvement on both Pillar 1 and Pillar 2 by business, in part through the BAGs, through the business advisory groups, which have played a role along with other stakeholders in informing this process. And Janine is one of the co-chairs of the Pillar 1 BAG, and Anne-Marie, one of the co-chairs of the Pillar 2 BAG. In addition to that, obviously, there have also been broader public consultations, including the rolling consultation on Pillar 1, which we'll discuss in a second, as well as some interactions on Pillar 2, albeit not on the rules or the commentary themselves, but now with a Pillar 2 consultation open for the detailed implementation guidance phase of the project. So now an opportunity for business and other stakeholders, I'll keep saying that, to weigh in. We understand that we are beyond the policy-making stage. Obviously, we still have questions about some elements of that, but on the other hand, we also know that for the most part, that part of this is closed. And we think that the role that business can play in this, the important role that business can play in this, is bringing an understanding actually of how business works, both new business models as well as, it has to be said, existing business models, how those will work under Pillar 1 and how those may work under the Pillar 2 rules. There are many things in this project on both sides which are actually really brand new. As Pascal said, we are moving away from the arm's length standard. I would hug it and love it a little more closely than some people would do. On the other hand, it has always been a work in progress as it adapts to new ways of doing business and to elements of globalization. So nor is or could the arm's length standard be completely static. None of the rules should be completely static because there are many changed circumstances, including digitalization, but not only digitalization, as Pascal talked about, increased globalization, perhaps now coming under some challenges. There is also, yes, to be sure, clearly a lack of trust in all large institutions, not just business, but businesses amongst those. And part of what this project has always been about is restoring stability to the tax system. And we certainly hope for that, and we hope that the work that business will now do, both on Pillar 1 and Pillar 2, about by making a system which actually works, by making a system which can be administered, but also by making a system in which all of the key players, so government, business, and other stakeholders, feel is fair, is consistently applied, and where there are a set of rules, an overarching set of principles which can be applied to that system. So in my effort, in my own particularly British way to bring a little bit of a British sports car as well, I'm going to stop talking and I'm going to hand over first to Janine, who's going to talk for a few minutes about some of the issues, some of the points that she and the Pillar 1 BAG and the BIAC tax committee more generally, has seen on the Pillar 1 side. And then after that, we'll go to Anne-Marie and then bring in Achim to comment on what he's heard. So Janine, let me hand over to you for 5 or so minutes.
Thanks very much, Will, and thank you also to BIAC and BDI for inviting me to speak today. I'm sorry I can't join you in person, and as you'll hear from my voice, I'm hoping my voice is going to hold out as well, because it's just a little bit croaky. So I'm going to speak to you a little bit about Pillar 1. Pillar 1 is not as far down the Formula 1 race as Pillar 2, to extend the analogy further. So far, we've only seen 2 sets of draft rules dealing with sourcing and nexus of revenues, and more recently on the tax base. And so it's quite hard, actually, for business to comment constructively without understanding how all of these pieces are going to fit together at the end of the day. But I just wanted to take you through some of the headline issues that business are seeing. And we're calling these out very much from the perspective of we want to contribute to this alternative tax system in a way that's going to make it actually function well and deliver on all of those political objectives that Pascal set out. So firstly, on the sourcing of revenues, this, I think, has been one of the challenging parts of Pillar 1, to devise a set of rules that can cover all the different types of business models that exist. You know, whether you're dealing in finished goods, whether you're a business selling to other businesses, whether what you supply actually disappears into another product, either because it's consumed or a component. And then there's all kinds of services. And, you know, in the modern world, I think many of us will understand that even things like manufacturing can get converted into something else without sourcing arrangements with third parties. You've got software as a service. So this is not static either, and will continue to evolve. So I think the challenge of devising rules that can source revenues in a way that it can be applied to all that spectrum of different business models is one very key challenge. Now, businesses have commented that perhaps in the interim, it might make more sense to use the address of the business customer in certain scenarios, or to use a system of global allocation keys. And this is driven very much by the sentiment that we need further time to understand how we can craft rules that are going to give the right result in terms of the sourcing of revenue streams. The second area is on the tax base, and the tax base, as you'll know, is driven by the results in the group consolidated financial statements. So they're financial accounting numbers, they're not tax numbers. And they are also consolidated group numbers. So some of the areas where businesses have concerns here around the tax base is to make sure that the effect of quite what used to be called extraordinary transactions, but they are things that are not in the ordinary course of business, that those the impact of things like that are adjusted for so that they don't disturb the tax base, which is, as Pascal was saying earlier, we're trying to focus on the residual profits that are left after you've deducted a routine return, being the 10%. And so stripping out the not ordinary course, I think is an important part of that. And the type of transaction we would be thinking about here are, for example, if you were to sell a business, and whether that's a combination of asset sales or share sales, it can be highly distortive. My own company entered into such a transaction in 2018. It increased the normal average run or average profit before tax by 50%. That's a big increase in a single year, and it just clearly illustrates how the rules must respond to that. There's also in the tax base, we are looking also at how you deal with minority interests, because financial statements consolidate where you control, so where you have in general more than 50%. But obviously, you don't own all of those revenues. You don't own all of that income as the M&E taxpayer. Part of it belongs to those minority shareholders. And then finally, I think the other point in terms of the rules that have appeared so far is around loss carry forward and shortfalls. And here, there are two different things really. It's understanding how the impact of more volatile business profiles might mean that you fall into amount A and out of amount A from one year to the next. And that could be because you've got long investment cycles. You might make losses for a period of time, and then you enter into a period where you're making revenues. So loss carry forwards need to be dealt with. The other aspect of this is profit shortfalls. So you might be profitable, but less than 10%. And then in the following year, you might be also profitable, but earning more than 10%. And it seems an arbitrary result to not take that into account from year to year, because you would get very unequal outcomes between different types of businesses because of that volatility. And then my last point really is around data requirements. Now, obviously, where you're dealing with the consolidated financial statements, access to that data is going to be reasonably straightforward. But when it comes to sourcing revenues in line with different criteria, then there may need to be newer systems established, new tracking of information at a taxpayer level. And that type of IT change and data collection really takes quite a long time to implement. And so we think there is an opportunity to have a sort of soft transition period for implementing Amount A, given that it applies only to a limited number of companies, that would allow the more detailed allocations to be reviewed and revisited once the whole is clear. And that soft transition period, for example, may be the use of a global allocation key where other data sets are at that point in time lacking. And so there would be an opportunity then to further refine the rules before they're extended out to a larger number of companies and have a much broader impact. So I hope that's been helpful, and they were the comments that I wanted to make in respect to Pillar 1.
Thank you very much, Janine. If we have time in our somewhat truncated session, we'll circle back. But those were very helpful, and I think that this issue of complexity obviously does pop up all over the place because these are new rules. They are complex rules. They're interactions between many countries. We'll hear the same in Pillar 2. One of these issues around the tax base, which itself is pretty new, will also pop up. So thank you very much for that. I'd just like to say, Pascal talked about Amount B, and Amount B does raise one of the issues that Pillar 1 raises as well, which is that in order for this process to work, countries need to agree on it. And business would much rather countries agreed on it than papered over the differences. And, with Amount B, I think it's clear that there are differences between countries. We saw this in BEPS as well with low value added services, that there are differences on what returns some countries wish other countries to get. And, I think, as you said, Janine, we're 2 papers down, 11 to go. And some of the issues around the surrender jurisdiction, for example, are also going to prove to be quite tricky. So we'll look forward to being part of that. So with that, let me hand over to Anne-Marie, who has been doing amazing work with her team in the Pillar 2 space, and for a few comments on Pillar 2. Over to you.
Is this on? Oh, there we go. So it's wonderful to be back in this part of the world. This is my first overseas trip since COVID, so reacclimatising to travel again. It's wonderful to be seeing people face to face. When Pascal turned our analogy into a motorcycle, the vision that straight away popped into my mind is of a person with a broken leg walking across the crossing, seeing this motorcycle barreling down the road towards them at a great rate of knots and wondering how they're going to get out of the way of it. I think that's how some M&Es are feeling at the moment. And, you know, we welcome the commentary that was released in recent weeks. I do think that there are probably some M&Es who have mixed feelings about the commentary. On the one hand, the commentary is great because now we can finally understand what some of the Pillar 2 model rules actually mean. But the flip side is that it feels more real to everyone now. And I think M&Es are really starting to realise that it's time for them to work out how they're going to implement this. I think the other thing that comes out of the commentary for people is that the commentary has some real work to do. There are things that are in the commentary which are not in the model rules. And so the commentary is very important and, as I said, has real work to do. I think too the administrative guidance, when that is released, will have some real work to do as well. And so one of the things that is certainly front of mind for M&Es is how we can, through the implementation framework, make sure that countries who are implementing Pillar 2 can give adequate legal recognition to not just the model rules that they implement into domestic law, but also to the commentary and to the administrative guidance as well. You know, that is a concern when I talk to many M&Es about what weight tax authorities will give to the contents in the commentary and the administrative guidance. The next big item on the minds of M&Es in terms of implementation is the missing piece being the safe harbours. The safe harbours are still something that many M&Es look towards as a way to find a pathway through the incredible complexity and additional compliance associated with Pillar 2. And I think there still is a lot of optimism that safe harbours can be found which will make a meaningful difference. But certainly the timing of release of the safe harbours is of concern. The faster the safe harbours can be available, the more that companies will be able to build in those safe harbours into their implementation process. And so at the moment, companies are looking at the processes and system changes that they need to make to implement Pillar 2, and it's a lot. It's a lot. You know, I'm very fortunate because my participation in the BAG has meant that I've had a bit of a head start on knowing what the rules were going to look like, and so we assembled our implementation team last year, in the middle of last year. And so we've had a head start, and we still don't know how we're going to implement it in time. And so for companies who have been waiting for the commentary to start, I really feel for them. I feel for how they're going to get the implementation team together to be able to implement this. And I think the safe harbours could be have an important role to play to at least give M&Es the ability to target or focus their implementation to the areas where they know that they're going to have a top-up tax liability and rely on the safe harbours to get them out of hot water in relation to some other areas. So we really look forward to an opportunity to work with the OECD and Working Party 11 on the safe harbours because we do see that as a very important part of the puzzle. There are, of course, some elements of the Pillar 2 rules which we assume will require some kind of peer review process. So whether the IIR is qualifying, whether a domestic minimum tax is qualifying. And so, you know, and likewise we assume that where a domestic minimum tax is implemented by a country as qualifying, that there'll be a safe harbour that means that you don't need to do both, the domestic minimum tax calculations and Pillar 2. But I guess our fear is that that it will take time for the peer review process to be put in place for these regimes to be considered qualifying. And so, you know, one of the things that we will be looking to raise with the OECD through the consultation process is whether companies can rely on the assertions made by countries that their regimes are qualifying until that peer review process can be put in place. Because again, that will just help companies to target where their efforts need to go from an implementation perspective. And so my questions, I guess I've got that I'd be interested to hear from Achim is just to hear about the administrative guidance and whether ideally that will be in a phased way that will enable, rather than a big bang approach where everything has to be drafted and released in one go, because that's a big task for the Secretariat and the Working Party, and so that could take a lot of time. Whether throughout that process, whilst we understand, as Will said, that we are beyond the policy phase of the process, whether there is any possibility for changes to the rules as things are discovered along the way that perhaps don't work as they should, what the timing of the safe harbours might be, and the question on all M&E's lips is whether the implementation date is a firm date. We'll still maintain some optimism to the very end. Thank you.
Thank you very much, Anne-Marie. I'm hoping that book that Achim has in his lap is actually the book with all the answers in, because he's had quite a few questions now. So let me just, before I bring Achim in, we are due to finish in 5 minutes. I'm going to take the privilege of probably going for another 5 minutes after that. So Achim, if you had 7 or 8 minutes of comments, and I'd just like to come back to Janine and Anne-Marie very quickly for very quick thoughts right at the end of this. But Achim, over to you.
Is this working? Yes, it is working. Well, thanks for having me. I will skip much of the thank you. I will thank Monica, who I sit here, for having us here today, but I'll go quick in my 5 minutes on the substance. So thanks a lot. I think first, maybe just one observation. We've here, like, we're moving away from transfer pricing. I think that is sometimes the wrong question and the wrong way to think about it. And I think it's important to see this. I think we have now for a time seen that we have introduced rules that supplement transfer pricing. This is not new to the pillars. We've seen this in BEPS. We've had CFC rules. We have interest limitations. We have hybrid. So it's not a question of, like, are we getting rid of the arm's length principle? If you step back, you just see that there's a whole host of rules that we have introduced in the corporate taxation space that don't rely on the principle of arm's length. But that doesn't mean that transfer pricing doesn't remain relevant for what it does. So I think that's just one point to make. So the discussion is not, is it this or is it arm's length pricing, but is a question of, is it transfer pricing plus other rules? And that's just the world we increasingly live in. And we've seen this as part of this project or earlier projects, if you go back. And the second part on transfer pricing is also, and I think it's the point that Pascal made earlier about how religious you are on the transfer pricing and the facts and circumstances. And being in Germany, of course, you're reminded of accuracy versus simplicity. Does it have to be perfect? Of course, we're in a place where it has to be perfect. And then you get something like the Berlin airport. But, I mean, apart from that, I think if we are more pragmatic, a certain degree of Englishness in here, I guess, where we come to sensible rules around Amount B that may not be perfect in theory, but you know what? They work in practice. Whether that's safe harbor ideas, more formulaic approaches that may well work inside the transfer pricing, then maybe we don't need to be so religious in the temple where we pray on transfer pricing but solve practical problems. I think that's just a sort of an observation on the transfer pricing debate. Then on speed, of course, we're going in Germany, so we're going with German Autobahn speed. We recognize this. That's where we're building the pillar, in the only country where we have no speed limits. But at the same time, and I see, Janine, what you're saying, it is not an ideal process when you're meant to be comment on pieces, but you're actually not seeing the whole picture. Now, you can turn over to Anne-Marie. She was not able to comment on pieces, and then she got the whole picture, also not an ideal process. So we probably have two imperfect processes, but we'll take that away. I fully see the point on how we need to do this. And then since I have the microphone, I mean, given that difficult situation also from us in the Secretariat, sort of a big thank you to the back chairs for a moment. I mean, Anne-Marie has not slept in months, and this is the first time I actually see her working in the same time zone. Like, she is on every single call that we do in the middle of the night. So now I actually see her with light. We haven't done this in 4 or 5 months. And the same, I mean, with Janine and Phil, this isn't easy. But thanks a lot for doing this, and we have benefited with the BAG operations quite tremendously within the constraints of the timeline that we did not invent. And then maybe just a couple of points, Janine, that you raised. I mean, first, I think on revenue sourcing. First, a big thank you to the comments. The comments are rich, diverse, and extremely useful. We have, a new outside-the-box concept of Pillar 1. It is novel. Doesn't replace transfer pricing, it supplements transfer pricing. And so we get outside-the-box comments, and we appreciate that. Christian sits here. Siemens had very interesting, equally outside-the-box comments, and we had a whole diversity of views. And I think from where we sit in the Secretariat, certainly our sense is that, as you say, Janine, the comments were constructive. They're trying to get to the right balance of what is the policy objective of giving that money to the defined market jurisdiction, but doing it in ways that cause reasonable compliance costs and are actually doable business. And so I'm confident that we can land in a sensible space there. We've heard your comments also on transition and other aspects, so we'll take that away. We are now taking our time to translate that and discuss that in the working party. I also take away your comments on the tech space and your build times. We are appreciative and understand that. Then maybe turning to the P2 and sort of the questions. And maybe answering the question sort of more generally. What we have in mind now next, I guess, is that we will have a public consultation at the end of April. And if you look at the bullet points that we outlined in the public consultation, they're actually quite important because they frame a bit the discussion and potentially also the panels on this. So what do we have in mind? One, where are there issues where you think we need additional administrative guidance that practically don't work, where we need to know more, where we need to issue administrative guidance, and we have written the rules in a way that the rules incorporate the guidance, so the rules make reference to the guidance, so we have some room in the guidance. And as you say, Anne-Marie, and as we've seen in earlier projects, on CBC we've done frequently asked questions, so we have been able to produce guidance. We would like to have all the answers in the beginning, but typically we do not. And so if we come to good ideas later, we need to find ways to get those good ideas into the administrative guidance. The second part, I think, that's coming out, and this is an important dimension also in what we have in mind going forward, is then what do we around safe harbors? The mention you make, safe harbors, yes, please, and please early, so we can build systems that take account of this. There, I think the shoe is on the other foot. So we want to hear from you now what sort of safe harbors you would like to see. Send them to us so we can debate the types of safe harbors to see. What is easier for your systems build? Maybe it's even easier for systems build not to have safe harbors. I don't know. There may be particular ideas. If we do have a safe harbor, what types of safe harbors do you see? You know the reflections that we had earlier, so you have a base, but it's sort of over to you to also tell us and tell the working party, what sort of safe harbors do you see? Then third, and this is a systems question, and we might have a panel or not on the systems question, as you flow the data up, what is possible, what is not possible? What are some of the limitations? What can you see? What sort of reporting systems do we need to have consistent implementation, filing obligations, all of this? And then finally, and this is the point that you also mentioned, Anne-Marie, already, on the coordination. How do we do the rule coordination? How do you know, when do you know that a country has a good income inclusion rule under tax payment rule? How does that work? Including also, how do we do dispute resolution prevention, perhaps inside existing treaties? What are some of the possibilities? So these are sort of the 4 blocks that we want to highlight and look forward to you in some sense to get input on those. So it's really over to the business, the stakeholder community, to also to come up with ideas. Where have we missed things? Where do we need administrative guidance? What sort of safe harbor, if any fibers, do we have? Dispute prevention, coordination, and then filing documentation systems. So those, I think, are the things coming up. And on the implementation date, I think Martin has already spoken on the implementation, so I'll leave it with that.
Thank you very much, Achim. So just very quickly to round this panel off, I want to come back to Janine first and then Anne-Marie. And I'm going to ask you both the same question. What is the thing that you hope for most in this project in the next few months? Janine, you first.
I'll keep it short and sweet, Will. So the early certainty process is really key to get that clarity up front, that it covers, the major transfer pricing issues as well. I think it is critical to give a certain tax base for the purposes of Pillar 1. So that's really the thing that I'm most looking forward to seeing.
Great, thank you, Janine. And Anne-Marie.
Mine's really simple, safe harbors.
Great. Well, thank you both very much. thank you very much, Achim. I'm delighted, as you're all in Germany, to be able to contribute some British punctuality to this panel. So thanks to Anne-Marie and Janine for the amazing work that they're doing, and also Phil Bullock and Chad Withers, who are the BAC members themselves, and the BIAC Tax Committee. Achim, thank you very much for participating in this. If Anne-Marie and Janine and other members of the business community are working 24/7, you're working, I don't know, 48, 8, all in the same week. We truly do understand and appreciate the amount of effort that you're putting into this and the outreach. So with that, let me also thank BDI for this opportunity and hand it back to Philip.
Yeah, thank you very much, panelists, for the interesting discussion. And now, as we are a bit behind of schedule, I would like to announce the first break, which will last until 2:25. Thank you very much. Now we are back from the break, and I would like to welcome all of you back to our conference. And I'm delighted to give the floor to Alan McLean, who is the next moderator of our panel. And I would also like our panelists on the stage.
Thank you very much, Philip. And hello again, everyone, and welcome to our panel session on the role of green taxation for sustainable economic futures. I'm delighted to be able to moderate a panel of such highly experienced and influential thinkers on environmental taxation, and I look forward to a lively discussion. As I said in my opening comments earlier, the world is in the midst of many transitions and transformations that affect us as individuals, as businesses, and as tax professionals. We've heard about how the digital revolution is leading to some of the most fundamental changes in the international tax system in generations. And at the same time, we recognize that we need to build more sustainable energy systems and business models if we are to limit and deal with the consequences of climate change on our planet and on our lives. Environmental challenges remain some of the greatest that we face today. The IPCC report released in February reiterated the need to accelerate the reduction in emissions and also the urgent need to increase investment in adaptation measures and technologies to counter the current and expected impacts of climate change. The invasion of Ukraine and the impact that that has had on energy and commodity prices reminds us how fragile and interdependent our economy and our world are. All of us, policymakers, governments, businesses, citizens, have a critical role to play in transitioning to a sustainable economic and environmental future. The question we'll be addressing on this panel is, what role can taxation play in supporting the green transformation of our economies and societies? Can tax help save the planet? Business at OECD has established an environmental taxes working group and recently published our environmental tax principles as one contribution to the growing debate. If you haven't read those, I would encourage you to do so, and of course to share any feedback you have on how we might be able to improve them. Now, turning to the panel discussion itself. Our panelists today bring together a mix of policy and business perspectives to help us form a well-rounded view on the challenges and opportunities of green taxation. Let me briefly introduce them. In the room there with you, I think you have Svenja Otto, who's the manager of Customs and Excise for BP Europe. Pascal Saint-Amand, who you've already met, of course, the director for the Center for Tax Policy and Administration at the OECD. And here, virtually with me, we have Federica Petroni, the head of international tax at Intesa San Paolo in Italy. So with that, by way of introduction, let me turn first to the first question. And I'm going to give Pascal the opportunity to lead off, since he can bring us up to date on the work that's been going on over many, many years, of course, but accelerating most recently at the OECD. So first to you, Pascal, what roles do you see taxes playing in addressing climate and environmental issues? And do you see a trade-off between pursuing environmental objectives on the one hand and stimulating private investment and growth on the other?
And thanks for bringing that topic on the agenda. I will indirectly respond to your question by just sketching out the current situation, which drove us to start a new inclusive framework, a new proposal at the OECD. The current environment is that carbon emissions that I think everybody agrees should be reduced with the decarbonization objective by mid-century, depending on the countries, but overall we're there. This decarbonization will not happen without some form of pricing of carbon. That's at least the consensus views of economists. At the same time, and I could almost quote Secretary Yellen at the tax symposium that were organized in Venice back to the G20 last summer. She said, as an economist, that's what I think. As a politician, I can tell you that practically we cannot implement that policies, and that there are many other ways of organizing this decarbonization than pricing, like climate change policies through regulations and non-price-based policies. So we start from a situation where you have a common objective, but very different paths to get there, with still an emphasis, at least in the academic community in a number of countries, and I should mention the European Union there, but not only the European Union. I could name Canada, I could name Switzerland, I could name Indonesia, I could name South Africa and many others, deciding to go a pricing way. Now, price doesn't mean necessary tax. You have emission trading systems, which are not taxes. And that's the way that the European Union with Fit for 55 is largely using by reducing the free permits on the ETS. So this issue of carbon pricing is not a binary approach of taxing or not taxing. It's about pricing directly, explicitly, through ETS, emission trading system, carbon taxes, excise duties, other taxes which may be more indirectly linked to carbon emissions, or, and that's the word implicit carbon pricing that we're trying to use, which is what is the equivalent price of non-price-based policies. But you may turn them into a price because there will be a cost, the marginal abatement cost, or the equivalent price of carbon, which are two ways of calculating what is in euros the implication of a non-price-based policies. So what I'm trying to say here is, obviously, the debate on the price of carbon, whether explicit or implicit, is what we will be talking about in the next 10 years. We'll forget about Pillar 1 and Pillar 2, because it will be implemented softly and not too costly, and we'll focus on that question. And just to give a number, and I'll stop with that, today, and that's what the OECD team is producing, the CTP team is producing. We are producing effective carbon rates and taxing energy use documents, which I encourage you to look at because they describe the price of carbon, the explicit or effective price of carbon in OECD, G20 countries, plus around 20 developing countries. And what this shows is that only half of carbon emissions are priced, half of them, which means half of the carbon emissions in these countries, which represent more than 80% of emissions overall. So half of these emissions are not priced at all through an effective price. And the other half, which is priced, on average, is priced at 4-point-something euros. 4 euros. So we are very far from the market price that you can see in Europe, which I think, I mean, I didn't check this morning, but it's probably around 90 euros the ton. So that's obviously the debate. And maybe we'll go back later to the other part of the question on the incentive part. But before moving to the incentive part to transform the technologies, we also need to reduce the fossil fuel subsidies. And I mentioned that because in an environment where the prices are hiking, we are going to face more and more pressure to reintroduce fossil fuel subsidies, which is not good policy, and that's what the OECD is highlighting, even though we can see the need to soften the impact of the price hikes on the poor, and the OECD recommends to do transfers for these populations.
Thanks very much, Pascal, and not least for reminding us if the car that we're driving might well be electric, but I think it's fair to say that it's been in motion for quite some time, and these are not necessarily new issues, but ones that take a much greater focus, of course, as at the moment and as we go forward. Svenja, perhaps I could ask you for your perspective from the perspective of business.
Okay. Also, thank you for the invitation, for being here in Berlin in person, which is a nice experience again, being able not to listen only or to participate by video, to be at a meeting in person. As already mentioned by Pascal, I think a price for carbon, if well designed, is a valuable tool for behavioral change, for reducing environmental harm, but also for increasing revenue, at least on the short term. On the long term, for sure, it should decrease if a carbon price works as expected. But carbon pricing alone won't take us to net zero. Greening the tax system must go beyond simply looking at different environmental taxes independently. It is crucial that the tax and regulatory systems are considered holistically and how each element drives the delivery to net zero. To further promote intended environmental policy objectives, environmental taxation should incentivize business investment and innovation in green technology, tied directly to science-based environmental objectives rather than awarded to particular technologies. Additionally, other policy tools will need to be used, including regulation, low-carbon fuel mandates, tax incentives for direct carbon capture, utilization, and storage, as well as hydrogen, and prioritized incentives to invest in new technologies, resulting in reduced oil and gas usage. The 2020s and 2030s need to deliver significant scale-up and deployment of technologies like carbon capture, electrification of transport and heating, hydrogen production, and its use in a range of sectors. Currently, it takes a lot of time before a project, for example, the production of green hydrogen, can really start, as official approvals, but also approvals of public subsidies, take a long time. This needs to be accelerated. And as also already mentioned, carbon taxes are undoubtedly needed, but they are often regressive, with the poorest suffering the most. Therefore, it is important that tax policies are designed in a way that the cost of the net zero transition do not fall unfairly on those least able to pay them. This is vital not only for fairness, but also to maintain public acceptance of the actions needed to achieve net zero. Financing the investments will be a key challenge in achieving net zero. If governments choose to, they can use the proceeds of carbon pricing to support a just energy transition.
Thank you, Svenja. Federica, any comments on this general first question of the role of taxes as part of the raft of measures that might be brought to bear to improve environmental outcome?
Yeah, sure. Hello, Alan, and hi, everyone. Thanks a lot for your question, and thanks to BDI and BIAC for organizing such a conference. So I would start from the bigger picture, let's say. I think there is a general consensus on levies aimed at achieving non-fiscal purposes, so the so-called regulatory taxation, right? And my personal view is very much in line, I think, with what Pascal and Svenja already mentioned, meaning going to the point, I think that taxation alone cannot be always regarded as the best tool to achieve regulatory goals in general. However, and notwithstanding this, I think that well-designed environmental tax can be a fair example of regulatory taxation. And therefore, to answer your question, yes, they can play a role in addressing environmental issues. I do not think, however, that they are enough to achieve such an important goal as the one we are talking about right now, because I think that they are one of the tools that we have at our disposal, and that environmental tax, in order to be effective, need to be included in a broader and bigger policy package, where information, communication, transparency overall is key to me. Another point that I want to make that I think Svenja already mentioned is the role of revenue here. Because we do know that if we introduce taxes in order to achieve non-fiscal purposes, such as the protection of the environment, it means that revenue should be, at least, let me use should, of secondary importance, right? But what I also think is that when we introduce these taxes, we need to consider the regressive impact of environmental taxes. We need to consider how they can have an impact on business. And therefore, it's fundamental that revenue generated from environmental taxes, in my opinion at least, are used for introducing social measures, for reducing the eventual regressive impacts of these taxes, and for stimulating growth in a sustainable fashion. Thank you.
Thank you very much, Federica. And maybe we'll come back to that question of the need for different policy groups to work together on these challenges. But maybe just if I stay with you, in terms of this balance between incentives for innovation and growth-oriented, environmentally friendly policies on the one hand, and taxing the bad things, if I can call it that, the balance between the carrots and the sticks. Do you think that taxes have a role to play in either or both, or more in one or more in the other area?
Well, I think this question is really important because, as I was mentioning before, and my wording was on purpose, of course, we were talking, and I wasn't the only one, of well-designed environmental tax. I think that the concept of well-designed is where we can see a difference in effective environmental tax and not so effective environmental tax. And of course, as you were mentioning, the design of these taxes is really difficult. When they asked me about design of environmental tax, I recall a decision of the European Court of Justice, which was of 2014, I think, and it's called Transportes Jordi Besora, according to which a tax can be regarded as being itself directed at protecting the environment only if it were designed so far as it concerns its structure, and particularly the taxable item or the rate of tax, in such a way to dissuade taxpayers from using that environmentally harmful product, or to encourage the use of other products that are less harmful to the environment. So if we use this definition of environmental tax, if we focus on the structure of that environmental tax, the question that is at stake, I think, can we really introduce this type of tax? Is it feasible to introduce this type of tax? And maybe if we have an answer to that, then I can answer your first question. So can we use tax, or maybe it's better to use incentive?
Thanks, Federica. Pascal, maybe from your perspective, in terms of this balance between the positive effects of tax on green innovation, for example, and transforming our economy in the ways that would have a beneficial impact on, for example, climate change, versus the more taxation as a, you know, of a bad activity or a product which society as a whole has decided should be diminished or reduced. Any perspectives on that, please?
Yes, couple of reflections. I mean, the first one is, as indicated, tax, and I may not have said that 5 years ago, but tax will be one of many instruments and probably not the prevailing one. I mean, you can hear my French accent. I don't have a yellow vest on me, but many French went on the street with yellow vests when the French government tried to introduce a carbon tax. And when you look at what happened in Latin American countries or other places in the world, you can see how toxic politically the introduction of a carbon tax is. So will tax play the key role there? I now would have some doubts because of how politically charged it is. If it plays a role, and it will, I mean, Indonesia is moving very slowly. There are strategies here and there. I was yesterday in the Netherlands, and we talked about that, about introducing some minimum floor and possibly at some point increasing them. So that will require some political economy of the reforms. It will play a role, but not the massive one that we thought it could have played a few years ago. And if it plays a role, I think Federica said it will have to produce revenue which will have to be spent on limiting the regressivity of these measures. As regards the carrot part of it, not an easy approach. I mean, clearly we are in an area where there are positive externalities which would justify tax incentives. Now, we also are in a post-Pillar 2 world, which means that there is a floor to what you can, or a cap to what you can do in terms of tax incentives. And I think the logic behind that is overall that subsidies, transfers of cash, which are much more targeted than overall tax incentives, make a lot of sense, are probably better used. And I speak in Germany, where I think the policy is more about the subsidies than the tax incentives, as is the case in France, for instance, and is probably something to explore much further. And possibly with the money which could derive either directly or indirectly from taxes or other price-based policies on carbon.
Thank you, Pascal. And Svenja, do you have any perspective on that, on this balance of the tax system between the carrots and the sticks, between encouraging innovation in technologies that will be necessary to meet the challenges of the climate crisis?
I think I will start it in the same way as Federica does, to say it has to be a well-designed tax. And as well-designed, it has to target the root of the problem. It has to target carbon emissions and the harness of power of the market to create change. It has to give businesses financial incentives to invest in the energy transition, allocating capital, driving innovation, and also scaling technology towards low-carbon alternatives, mitigating carbon lock-in and the risk of stranded assets. It has to advance the competitiveness of innovating business in an increasingly carbon-constrained world. And it has to encourage customers to make lower carbon choices. And the most simple carbon pricing is the idea that those who emit most have to pay most. It is designed, I think, to introduce a price signal into the value chain to promote alternative, less environmental damaging behavior by making alternative options more economically viable. As green taxes will in many cases increase the price of environmental damaging goods, this should translate into impacts on demand as well as supply and shift consumers towards greener alternatives. However, in implementing the polluter pays principle, it is crucial that the tax mechanisms are targeted at those points in the value chain where they really can influence decision makers to take a decision which will result in lower carbon emissions. For example, tax breaks for zero-emission vehicles work because consumers have the option to buy them. In contrast, tax breaks for hydrogen fuel cell trucks may not be as effective in the short term because hydrogen is not currently routinely available. In this case, tax incentives would be more appropriate further up the value chain with potential hydrogen producers. And in line with the polluter pays principle also, governments should tax the bad, such as pollution, but they also should reward a good, such a reduction in pollution. However, saying this, I think it's important to consider how these measures interact. If you tax a bad too much, it potentially constrains the ability to do the good. So the use of carrots and sticks by government should be balanced to encourage action from consumers and businesses.
Thank you, Svenja. And maybe just a final question. I know we're coming towards the end of our time. From your perspective, Svenja, is there more that business could be doing here to engage on this whole subject of tax and the environmental taxes, and how should we work better together with other policymakers?
I think for business, from a business perspective, we require a long-term predictability in taxation and regulation to underpin our investment decisions. Long-term certainty of taxation allows business to commit to long-term investment if budgets underpinning this strategy have a reduced risk of surprise cost. This is especially the case in the energy industry, where it can take years for both hydrocarbon and low-carbon projects to start to produce energy and generating returns, and therefore a long-term predictability is important. This is not to say that tax regulations should not change over time. Flexibility and responsiveness in a tax regime are important if businesses and governments have to adapt to a changing environment and ensure policy objectives are met. Businesses would welcome to be provided with roadmaps, plans, or frameworks from governments which set out the direction of travel and future strategies. The roadmap should set out consistent and long-term environmental tax policy goals and a holistic vision of how tax contributes to support net zero objectives. But it also has to address such important issues as the substantial loss of revenue from fuel duties as vehicle fleets are electrified or uses low-carbon fuels. So the income from fuels duties will decrease over time. Additionally, the opportunity for engagement with policymakers before significant changes are made will be very welcomed. Any proposal for new environmental taxes should follow an established policy-making process with businesses and other stakeholders properly consulted in a timely and transparent way, and also giving us time to respond. Wide engagement with businesses and other stakeholders provides the opportunity for sharing ideas, experiences, and maybe also best practices. This enables policymakers to take informed action, putting in place simple and competitive measures, whether they be in the form of a carbon tax, an incentive, a subsidy, or a regulation, in a way that encourages sustainable growth and is economically efficient, meeting policy objectives and society goals at least costs. Environmental tax policies should consider both current and future business models to design an effective, forward-looking pro-growth environmental tax framework that meets the needs of all stakeholders. Impact assessments of the environmental effectiveness and economic efficiency and post-evaluation processes are critical to validate the efficiency of the measures regarding the environmental objectives and their effects on the economy and competitiveness of businesses. In addition, common approaches should be taken to ensure consumers have relevant information to enable them to make appropriate and consistent decisions. A clear and open communication is essential for a successful environmental tax policy. Well-communicated tax policy choices that look on long-term run benefits in terms of people's well-being, environmental protection, and resilience to climate and future shocks can increase public acceptance. And if tax-raising measures are implemented, tax rates should increase gradually over time to provide a predictable tax trajectory. They should also be published well in advance so taxpayers and governments can anticipate change. There are good examples, for example, with regard to the ETD review in the frame of the Fit for 55 package. The EU has provided exemption for 10 years to allow low-carbon alternatives to be developed. Additionally, for certain products which are needed as bridging technology, such as LNG, LPG, and also for certain sectors, such as aviation, tax rates will increase gradually over 10 years. This is helpful and welcomed as it sets the roadmap, a direction of travel, together with price indicators, giving businesses time to develop alternatives that will enable minimization of both cost and emissions.
Thank you very much, Svenja. And I see we really are coming towards the end of our time. So, Federica, anything briefly on the role of business in this debate?
Yeah, a lot. I will be super brief. I know that there is time concern here. Just really a couple of comments. I think Svenja already mentioned a lot on this, but I want to take a statement that you made at the very beginning. I think here, considering the type of goal we have in mind, the input of all the different stakeholders is really, really important if we want to achieve a sustainable economic future. And I think the OECD is on the right track on this, but I really think that we need to work hand in hand also with business, because as I was mentioning before, taxes can play a role. Maybe they should play a role, but in a bigger policy package. And this package should be really done and built up hand in hand with business, I think, because otherwise, considering such an important goal, I don't think we may achieve it. Thank you.
Thank you, Federica. And then finally, Pascal. Obviously, if we're going to deliver on these aspirations, it's already a crowded space. We will require policy coherence across taxes and other policy groups, both at the multilateral level as well as at the domestic level. From your perspective, is there room for businesses' voice, and how can we make the most of it?
Yes, of course, as always, there is not only room for a voice, but room for action. I mean, you have to transform. And the relative prices, as they will be impacted by whatever pricing policy or indirect pricing policy through other mitigation policies, will have an impact on you. So you will be, if not the driver of the change, but the ones executing the change. So there is no doubt upon that. And I think in this area, there is probably not much as an opposition that we've seen with BEPS and so. I mean, there is a convergence. We're all aware of where we have to go. We're all aware of the challenges of decarbonization, including for I mean, oil companies like yours. That's a massive challenge that you're embracing and working on. What we can do as the OECD is offering a platform for governments, business as well, to engage on what is the price of carbon, what's the trend, maybe to help on the predictability which is necessary to do the investments and so. You said it's a crowded space. I would think that on carbon pricing, it is not a crowded space. Nobody's talking about carbon pricing in terms of international organization. The IMF now is engaging there with the idea of a carbon floor, carbon price floor, but UNFCCC doesn't talk about carbon pricing. The words carbon price are not included in any of the UNFCCC process, and that's why the OECD says, well, we need to engage into that dialogue also to avoid trade tensions. I'm speaking in Germany, I know how sensitive you are to trade tensions. CBAM may result in trade tensions. We are fully supportive, as the OECD, of a move by the European Union, which shouldn't be delayed. So let's be clear, our initiative of inclusive carbon pricing is certainly not to delay any player to move ahead, but to engage in a dialogue with those who will not do explicit pricing so that we have common information, you have common analytics, you have a common approach at the end of the day, which will include, of course, business to be part of the dialogue, because at the end of the day, you are the ones who will make sure that we decarbonize.
Thank you very much, Pascal, and thanks to everyone, Svenja, Frederica, for your comments and inputs on the panel. I'll bring that to a close. I think we could have carried on for much longer. It seems like we have a major task ahead of us, and that will require significant innovation, not only in the things that we do and the way that we think, but I think also in the way that we work. We as tax professionals working with others to ensure that there is coherent policy framework for decarbonisation, for improving environmental outcomes and ensuring that the transition to that is indeed a just one. So I look forward to working together on that. Thanks, everyone.
Thank you.
So thank you, everyone. We will now take a short break again, and we will be back at 3:20. Welcome back. We have now arrived at the third and last panel of today, and we're going to discuss the digitization of tax and the challenges and chances related to it. We would like to know how it can facilitate the cooperation between revenue authorities and taxpayers. And this is especially important as businesses need to present more and more data in order to be compliant. And at the same time, we face new technologies which can simplify procedures. And thereby, they can also reduce the burden on taxpayers. I'm happy to have three distinguished panelists from the OECD, the business community, and the advisory sector with me on the panel. Let me first welcome Dr. Achim Pross, Head of the International Cooperation and Tax Administration Division at the OECD. He's been with the OECD for more than 20 years and is, besides addressing the tax challenges arising from the digitalization of the economy, also working on the common reporting standard, for example. A warm welcome also to Georg Gebert, who is not only Director of Global Tax Policy at Siemens, but also active in various networks and expert groups. And I'm especially happy that he is here in his role as Chairman of the Institute of the Digitization of Tax. And finally, I'm happy to welcome Alexander Vetten. In his role as partner at EY, he is also tax innovation leader at EY Germany. And in this role, he's very familiar with the new digital tax function and the need of managing tax big data. But now I would like to start off with the first question for Achim Pross. Achim, could you please outline what happens at the international level regarding the digitization of tax? We would also like to hear about the OECD's aims and objectives in this area.
Thanks a lot. I hope this is on. Yes, 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 yes. So I get to say a couple of words. I've even brought you 2 slides. I will click on the button, hopefully the right one, to walk you through this. But before I do the slides, just a very quick, I guess, summary of where we are. To say the obvious for those that work on digitalization of tax, maybe you don't need to listen, but for the others that are less in the topic, we do make a distinction between the digitalization of tax administration and digital transformation. And that is important to understand the work program. With digitalization of tax administration, what do we mean? We improve the delivery of the tax administration system as we have it today. It relies on voluntary compliance, it relies on filing, it's typically an after-the-fact verification process, and there's a lot of things that we can do and have done with a number of the member countries. And I think in this area it's important that the work that we do on the tax administration is not limited to OECD member countries, but it covers wider, it covers the G20 countries, it covers a whole host of other developed and increasingly also developing tax administration. So it's a broad group. So here we help people on their journey, whether it's on e-filing, on e-payments, but essentially like working inside the system as we have it and making it incrementally better. And then there's a second part, which is sort of the part that we feel more strongly about, which is the actual digital transformation, which is a leap. And that seeks to embed taxation processes in the natural systems of the taxpayer. It's a different approach. It's not just doing the same harder, it's actually thinking about digitalization differently in that context. We all know this from PAYE and wage withholding, where we've designed it in the business software payroll processes, and we will talk about e-invoicing. There's another process more recent where this is happening in a lot of countries in the EU, outside the EU, probably even started outside the EU. Some of the Latin American countries have done this for years and years and years, and it's now spreading. It is not just a fraud protection proof system, it's also something that allows pre-population. There's service offerings that can be built on the back of this. So then, with this sort of in mind, and this is sort of the broad framework within which we think about it, why do we work on this? Well, first of all, scale. If we think about the numbers are massive. And if you give a couple of examples, then OECD member country tax administrations collected in 2019 8.3 trillion euros. That's a big chunk of money. And so when you then think about it, for instance, there's an HMRC estimate that estimates that the PAYE wage withholding has a non-compliance tax gap of about 1%, whereas on the self-reporting it's 15%. So if you think about, in some sense, easy money from a compliance perspective, while at the same time you remove burdens, then that truly is a win-win topic, I think. Maybe it's pillar 3 since Pascal is listening. So that's the one thing. Then the second thing, so we do it because there's a lot of money in it and it's clearly a win-win type issue where we can make a lot of progress in it. Then the second part, I guess, is also that we have, as I mentioned, very different countries around the table. There are different parts of the journey. Some of them in the early days of digitalization, and we can still help them with e-filing and some of the others. And some of the others, some of the Nordics, Singapore, a couple of others that are deep into embedding taxation processes and banking apps and a whole host of things way beyond anything that we typically see here. Here for a moment in Germany. So huge potential, including in the country where we sit, to do some of the things and learn from countries where you might sometimes not expect it and transform that knowledge over. And the last bit, I think we see significant opportunities of standardization. We all on the same journey. We're at different parts of the journey. Some are further ahead. We can learn from those and we can help to avoid a situation, given that we're all on the same journey, that we have 50 different countries doing 50 different things so that businesses are faced with 50 different solutions. So that in some sense describes a little bit sort of how we see the vision, what we're doing and how we're helping the member countries shape it. There's knowledge sharing. I'm going to talk about this in a minute, about like even making information available about what it is that countries around the world are doing. Then, of course, from information sharing, we help them do the diagnostics. So what are some of the things that they could be doing? 2 common projects where we implement solutions or help to implement solutions. And I guess we're going to also have this in the discussion. So let me just, if I press the right button, show you just a little bit what we're doing. I hope you can see this. We will be, this is the first launch, it's not the official launch because it's not launched yet, but we will soon be launching, and we have been collecting data from about 60, 70 countries around the world about where they are on the journey. Some of these tools also exist outside the OECD, we recognize this, but this is information provided by governments on where they are. And it's not just us doing it. We're doing this in partnership with a couple of the organizations around here. So this is not an OECD versus the others, only our turf. This is a very broad-based initiative of an inventory of tax technology initiatives that we have broken down by tax types and by a couple of other categories, just to give you a sense of, like, giving a sense of what's happening around the world so we can have this discussion with the members. And so this is just an example for around like digital identity. You'll be able to see on the map different dots, which country is doing what, and then sort of to zoom in to also see where it clusters, where in the world different tax administrations are, what are some of the opportunities. So maybe I step with this, and that was a brief summary of how we think about it, where we are, and the big potential that we see.
Thank you very much for this insights on the topic, Achim. You've also raised an important point regarding the standardization, which is important to the digitalization. And to open the discussion, I would like to hear from Georg and Alexander, what are the major issues from a practical point of view when it comes to the digitalization of tax? And I would like to start with Georg first.
Thank you very much, Philip. I think it's important to see where we're coming from and where we are heading to. I think in the past, necessarily, tax planning was a very important issue for tax departments. But I think the focus has very much changed from tax planning, which of course was also meant to save cost, to complying with new regulations, because new regulations, starting with the BEPS process, BEPS implementation, BEPS legislation, has proven to be very difficult to comply with. And we have a lot of transparency and reporting obligations that we also have to comply with. So the focus has changed to compliance, and if the focus is on compliance, you automatically start to think about how to save money or costs and gain efficiencies. And there, of course, digitalization will be one major task for every tax department. And therefore, I would say that companies are also in a transformation process. It's something that will not be done overnight. For example, speaking for Siemens, we are at the moment implementing S/4HANA, the new version of the SAP ERP. And this is something that will bring us forward in terms of data availability. But it will take some years. It will take something like 7 to 8 years probably. Yeah. So it's nothing that is done overnight. That's very important. Achim just mentioned that many countries are in a different stage, but companies are also in very different stages. So if the governments start to establish standards, I think this has to be done careful sometimes, because not every company will be able to comply with these standards. So it's very important to have some implementation time for that. And then one thing that I think is terribly important to acknowledge, that we are in the same boat, or we are two sides of the same coin. And digitalization at its best works when we are working together to get it done. Yeah? Because the standards must be feasible for companies, otherwise it's not possible. And standards should be of some use for companies to gain efficiency, not only in terms of gaining more transparency and information for the government, for the tax administration, but also in terms of getting more efficiency into the companies. And I think that is digitalization which will be useful for a whole economy. And I'm convinced that tax administrations or tax legislators can be the impulse, can give impulses for the digitalization of the whole economy if it's done right. Yeah? So we need standardization, we need interfaces that are able to really exchange information. We experience many times in the field of taxation that we have digital information, We send it to the tax administration and we get a paper form back. And then we have to type it in again, you know. So that really doesn't make sense. And but there are so many examples. I will leave it with this one because we don't have much time. But you know, there are many, many examples what could be done to really gain efficiencies. Thank you.
Thank you very much. I think both of you have actually raised very interesting points regarding the standardization and the cooperation. And when it comes to cooperation, I would be interested in hearing your view, Alexander.
Yeah, let me start with one funny observation, right? Whenever I talk in any other business with someone about standardization and automation, people are thinking about less work, right? Within the tax community, the picture is totally different, meaning that the majority of people think about having more work, right? And have to spend more money in standardization in reporting. So I can only estimate or say what I've experienced from the past, right? We have seen in about 60 countries digital efforts rising by the authorities, and most of them are focusing on, let's say, additional reportings, which is fair from my perspective, in particular to avoid tax fraud, to close gaps in taxation. But this is kind of, I think, first generation of digitalization, right? And that is also what we have seen in Germany, and therefore I really like the example with sending electronic data to the authorities and getting paper back, because digitalization and tax is kind of one-way ticket, right, at the moment. So, but I think we are, as we are sitting here to jointly together, we are in the position to, let's say, to design a future model where digitalization in the second generation leads to, let's say, mutual beneficial advantages on at all levels or at all stakeholders involved, including in particular the taxpayers and not only the authorities. So meaning switching more from a reporting approach into a mutual cooperation mode.
Thank you very much. The issue of mutual cooperation and benefits is I think, really important. And one example where this can also be really important would be the example of e-invoicing. When it comes to e-invoicing, tax authorities as well as businesses would be able to benefit. And actually the implementation of e-invoicing is also one of the main objectives of the new German coalition government. So we will face a discussion here in Germany as well. So I would like to start off with another question on this topic, and would like to know, when it comes to e-invoicing, how should it be best designed from the user perspective? And perhaps, Alexander, you could elaborate a bit on that.
When you ask the user, you have to ask the gentleman on the right side, but let me perhaps start with an observation. So, meaning we have that message in the Koalitionsvertrag in Germany. So, meaning at least Germany will move. And currently, we see exactly that development, that also authorities are negotiating, discussing, and agreeing about solutions that are leading to joint projects, meaning away from just reporting data. You can say also in English, away from digitization, changing to digitalisation. So meaning just adding a couple of letters to it, but that is really going into a kind of away from a centralized, I can say centralized data gathering and reporting approach into a more decentralized approach, exchanging data and collaborating jointly together between tax authorities, taxpayers, and in particular also technology providers in a broader sense. So meaning that we perhaps also the OECD, but I'm happy to hear that an answer to that perhaps later, is not in a position to really harmonize all interfaces and data formats with regard to e-invoicing across the world, but at least maybe we can look for a technology provider who is going to do that not the taxpayers have to deal with that issue in about 150 countries agreeing to 150 interfaces, 150 data and standard formats when we talk about e-invoicing. But I'm also happy to hear the perspective from Siemens in that regard.
Yeah, on e-invoicing, we have really an interesting landscape right now. I mean, we have many countries in the world that have already implemented some e-invoicing systems. Then we have at EU level the consultation on the VAT in the digital age. And we have the coalition treaty in Germany, which is saying, well, as soon as possible, they will, the German government will implement such a system in Germany. So there's something happening very clearly. I think it's important, first of all, to see that exchanging invoices is something that businesses do among themselves. So it's a process that, first of all, has nothing to do with taxes. Yeah? So and then it's when such a system is being implemented, it's very important not to harm this process between companies, because if the system of the government doesn't work, if there's a failure, we cannot exchange our invoices anymore, and this is really detrimental for companies. And then there is this issue of efficiency. I said earlier that it's very important to do digitization in the tax field right, meaning to have advantages for both the tax administration and the businesses. And in the e-invoicing sector, I think there can be much can be done wrong. And you see some examples in the world where governments have implemented systems that only satisfy their need for information. But in these cases, it means that companies have their invoicing system between companies, which might be electronic in some cases, but in paper in other cases. And then there's a totally different system, a second system, that they have to comply with in order to send the same invoice a second time to the government. That is not efficient. Efficient would be to say, okay, we create a new system which is standardized. There's, for example, PayPal, which is already a standard in Germany for B2G invoices, so it's nothing new, and people, businesses are using it, and it works. And you could, for example, take this standard and say, okay, this is the new standard, just like, for example, SEPA for wiring money within the EU. It's also something, it's a regulation to set a standard that to make life easier for everybody. And in the same way, we could establish such a standard, and then companies would exchange invoices based on that standard. And if governments would like to get the information, they can get the information from this PayPal system. And every government might want to have different information. It's not, you know, it's not said that every government needs the same information, because every government has different information needs. But it shouldn't be more than the PayPal standard sets as a standard. Yeah? So this is something that could be done, and then we have efficiency gains. And then you have the exchange of structured data between companies. You could feed in the structured data immediately into the ERP system, and that would be, I would say, a perfect world for the idea of gaining efficiency.
Agree. At least the expectation is not to go for a kind of reporting model, right? Meaning at least clearance like in Mexico, right? There we see nothing changed in the law, but taxes paid rise significantly. But when you're referring to the current developments, then it looks like things are developing in the direction of kind of PayPal model with a more decentralized approach, right?
Thank you very much. Georg, I think it was you who mentioned kind of what would be a perfect world. And touching on that, I would like to know from you, Achim, I would be interested in what did the OECD learn from the experiences in different parts of the world, and how this could potentially be aligned with the needs of industry.
A good question. I mean, first, for those that haven't read it, because we don't produce enough paper, we have produced more paper in a digital project, of course, but it's on our website at least. It's something called Tax Administration 3.0, which I think the tax commissioners adopted as a statement of principle and a vision. Right? So there's a vision out there that the tax commissioners from around the world, largely OECD, G20 countries, and a couple of others have signed up. And that is very much the vision in some sense that you described, Georg. So that's, can we embed taxation processes in the natural systems environment in which taxpayers operate? And that's like a broader concept. It's not just a corporate income tax concept. We've done this also for corporate income tax. For instance, the Netherlands has done examples where you do tax compliance in the accounting software pieces and you accept some of those and you can certify some of those. So there's these approaches. There's approaches in Singapore that involves interaction with the governmental authorities, the tax authorities, and others, having a digital identity across the board. So there's a whole host of things, but the idea really is to make it frictionless, seamless, and embedded. And so that means you need to understand the processes inside a business, and you need to see how you can implant the taxation process in that process rather than adding another process on top. And I think people that think about it, at least the way we think about it, I think would recognize that that does not only do something for businesses, because it starts with the business processes and tries to work towards this and integrate it, but it's also like something like compliance by design, right? That's the very important part. So if you design the process that it gets integrated in the natural systems environment, you actually sort of largely design out non-compliance, rather than creating a separate system that requires its own policing and verification and tax administration resource. If you make it easy, and if you design it out, then you reduce non-compliance. So that's the starting philosophy. Now, then on e-invoicing, you're absolutely right. I mean, we've seen very, very different models. We have a working group on e-invoicing that's, you know, much larger than the EU, of course, because many of these e-invoicing systems started in countries that are not in the EU. And then if you go to some of the Latin American countries, they've had some of these in a while. Chile is a very good example of somebody of the early pioneers. And so we're also seeing sort of an interesting development where you would not necessarily expect it, that you have some countries in other regions of the world, they're much more advanced at having this iteration, another iteration, and the learning, and we're trying to bring this learning. We recently also had, without naming the names, a tax commissioner from an Asian country that's now thinking about introducing it, coming to us and say, what's the best practice? So we are engaged in an exercise of best practice. There's things that we can certainly do at the OECD, but in some sense, as you always do as a lawyer, you ask him a question, I give you a question. And I think that's a question also to BIAC, and I'm pointing to Georg here, whether it wouldn't make sense, for instance, to have a business BIAC advisory group somewhere on digital transformation, pillar 3, so to speak, so that we can also hear from business, because that was one of the questions from that particular commissioner that came to us. Like, from the experience of business, I am new, how does it look from your side? So that when you advise a commissioner or a country that's thinking about an e-invoicing system, that they get the view from their colleagues about their own system, but very often the colleagues will tell them that their system is the best system because that's the reason they have it, obviously, exactly. But it'd be very good to have a second voice that comes as we engage with these countries and say, well, maybe you want to look here, you want to look here. What's the experience of business with a particular system? And being able as OECD and Secretariat to articulate and bring together these two voices, I think is tremendously useful as countries think about introducing it.
Well, Arim, I think that would be very useful. For example, the countries that that are the pioneers, that have first adopted such e-invoicing systems, are not necessarily the ones that have the most advanced systems, which is somehow logical. But they, of course, want to keep their systems. So they will, I guess, advertise their system as the best. But in the past 10 years, there have been progress, of course. And the new systems, I would say, are much better than the old ones. And that's a problem, of course, with the digitization in total, that it's constantly evolving. So you have never finished with your systems. You always have to get more advanced systems to get updates and to progress. And that's something that might be difficult in the future, not only to implement something, but to keep up with the pace that progress somehow tells you that you should do. But I think there are many more issues that could be discussed, like cooperation tools. for example, now since Corona, COVID-19, of course, there are questions asked, how can we cooperate in a digital way? Yeah? It's nothing that has to do with the digitalization of the systems, but how do we interact? Can we interact via Teams, for example? Can we open a Teams channel with the tax administration? There are some companies who do that. And
sending emails would also be great. Right?
Exactly, but I know a company in Germany that is cooperating via Teams. So it's possible in Germany, and it's being done. But there are really many issues, or sending documents secured with blockchain or whatever, and the question arises, is this being recognized by the tax administration, yes or no? So there are, I would say there are infinite questions on digitalization, but of course we have to restrict to some key questions, that's for sure, and sorry, the questions that are feasible by the OECD. And I think the invoicing would be something feasible, even if there are already some countries in the world, but I think it's not, the aim shouldn't be to change the systems of those countries, but to harmonize the systems of the countries that might introduce e-invoicing systems in the future. If you then have a standard for the rest of the countries that are new to the system, maybe the other countries will, in the future, adopt the new systems.
We're happy to take this away and sort of also have a broader conversation about other digital solutions in the tax administration space outside e-invoicing, where business believes there's a real need for standardization and a real benefit. So we get this voice into the decision process of where do we focus. I think that clearly is the case. And of course, we do digital standards. If you think about the automatic exchanges of information, they rest on XML schemas, and maybe we should be updating those as well, that are all developed by the OECD, and whether they're exchanged in the EU, it's the same schema, or anywhere around the world. So we have those procedures. We also have the technical people that can work on those standards, in my division even. So all of this is possible. We're happy to take it away. And just sort of to add a little color of what you're saying, we're also currently working on facilitation of intra-tax administration conversations, because you have one of how do you engage with the tax administration as an advisor, as a company. We have tax administrations now digitally communicating with other tax administrations. So take, for instance, MAP. MAP used to take meetings. Now, very often, MAP should be digital. There's huge opportunities if we can make this digital, but many tax administrations currently, it seems like everybody can use one platform, but nobody can use the same platform. So there's different security specifications on different platforms, and we're trying to sort of get that working so that they continue to talk during Corona, but then also post-Corona, because some of that will certainly be with us, and some has actually worked quite well and should stay digital and may create efficiencies.
Yeah, thank you very much. I would just like to come back to the point of standardization, which has been touched upon. And after all, as already mentioned, digitization is also about standardization. And I would like to ask you, Achim, once again, what can the OECD do as a standard setter in this field so that businesses can benefit from standardization?
Well, first I can take this conversation back to Paris, where I shall go tonight. So I think that's already good. I think, as I said, there's maybe thinking around sort of an institutional frame where we can have more of these discussions, not just here, but sort of more broadly, so that you can even articulate what are the particular areas where in this space you see the needs for standardization, so we can bring this. Tax administration commissioners are very open. They're business-minded people. Simplifications, cost reductions, efficiency from the top is clearly present. But of course, you also need to recognize, as you say, there's a legacy environment. Once you've invested in your system, it's not easy to move. At the same time, we all know that this is never at an end, as you say, so you constantly have to adapt. And then we need to see also the dimension of purely domestic versus the international dimension. If a system makes sense in a domestic context for 90% of relevant transactions, and then there's a 10% international that doesn't work so well, the calculation, the cost benefit is different from something that is largely international with a little bit of domestic. So we need to take this into account, and of course also recognize that, sort of, there are different countries around the world that will want to do different things. So we can't be overly optimistic on the ability of standardizing this, but there is potential. We've been able to do this in a number of areas in the Forum on Tax Administration, so there is an interest if there is a focus, and we come up with the sorts of things that we can do. I think the OECD is very happy to facilitate that.
Thank you very much. As you said, you could bring it to Paris tonight. I would like Georg to know from him, what should Achim take with him?
Well, that the need is there. The companies start working now. The investment is very high, which means that companies would like to have some perspective. Yeah? Does it make sense to invest in digitalization, or is it sunk cost sometimes? So if you introduce a blockchain with your business partner and in the end the tax administration says, well, sorry, but I can't recognize this, you don't get your input VAT back, then it's an issue. I know this is not an issue for you, but just to make an example. Maybe that standardization is something that comes up in different forms. You have technical standards, you have standardization of forms, for example. So if you have a common base like for Pillar 2, maybe you also can have the same form everywhere to make the tax declaration. And then of course you have, by the way, in Germany we have the business tax, but we don't have the same form everywhere. We have different forms in every municipality. Which doesn't make sense at all, but that's a reality because the municipalities decide on the forms. And then the third one is, of course, the material law, to standardize the material law, which has happened with Pillar 2 and with the CBCR, for example, transparency obligations. And these are all very interesting paths where we can continue, or the OECD can continue.
Thank you very much. As we are running out of time, I would like to ask you, Alexander, what would be your message for Achim?
It's all said. I think just really underline it with it has to switch into kind of mutual beneficial cooperation between all involved stakeholders from my perspective. So meaning if you could really help us that digitalization and digitisation in the tax area is not a one-way road from the taxpayer reporting to the tax authorities, drifting it more in a cooperational model with benefits for all parties, that would be highly appreciated.
Thank you very much. Unfortunately, time flies and we have to come to an end of the discussion, but thank you for the lively discussion and your interesting remarks. And I think we can be sure that this topic will be on the agenda in the next years. But for now, I would like to hand it over to Nicole Primmer, who is with us virtually today. She is Senior Policy Director at Business at OECD and will be providing her closing remarks.
Thank you very much, Philip. And I'd like to express our sincere thanks to BDI for organizing today's conference. It was a long time in the making, given all of the COVID hurdles that we had to overcome to come to this day today. And I'd like to thank in particular Monica Wuneman and Philip yourself for your leadership and support in making this possible. I'd also like to thank our OECD colleagues, to Pascal and to Achim for joining us. Also to our Business at OECD and German colleagues who spoke on today's agenda, and a thanks to E&Y, who I know provided important support to today's meeting. As our Tax Committee Chair, Alan McLean, noted in his opening remarks, international cooperation and engagement with the OECD on international tax policy, it's more important than ever. This has been emphasized by all speakers today. And as I refer to our earlier remarks made by our opening speakers, I think we all have our motorcycle helmets tightly fastened on, navigating pillars 1 and 2 and many, many other issues. It's clear that good tax policy is essential to recovery and growth, and all the more important in face of the many uncertainties we face in today's world. In this context, we highly value our engagement with OECD towards the goal to ensure a comprehensive, coordinated, and practical approach across issues on the international tax agenda. We have a lot of work ahead, I was really pleased on this last panel to, at the prospect of setting up a business advisory group or a technical advisory group on digital and tax issues. And we look forward together with our members on this essential and continued cooperation with the OECD. And again, a very sincere thanks to our BDI colleagues for today's conference. And now I'd like to turn to Monica Wunderman, who will close the meeting. Thank you.
Finally, the best comes at the end. And I just want to thank all our speakers here in Berlin and from all the places around the world. And I think we have very different times now. First, the COVID pandemic, and then this terrible Ukraine crisis. And therefore, we are very pleased that we could hold the conference here in Berlin and meet all the person here in Berlin. And we are very grateful that this was possible. And especially I want to thank Philip and Daria from our BDI team for the great work and the perfect organization of the conference, and also Nicole from Business as OECD, and also EY for supporting us here by the conference. And I think we have seen there are very big challenges and which affect all of us. And it became clear that they all can only be addressed globally, and that the OECD has emerged as a global standard setter for tax. BDI, as the voice of the German industry, looks forward to further discussions, and I hope you will join us again. So, have a nice evening, stay safe and healthy, and come back home. Have a good time. Thank you very much for all your